This afternoon, we're still going to discuss about bank regulations, but specifically, we have the following objectives: to be familiar with some important US banking regulations, but it's not only for the United States. We also need to understand the most basic of banking laws or regulations in the Philippines, namely the Bank Secrecy Law and RA 9160. Let's start. So, some of the major banking regulations that is being used for compliance in the United States are the following. Actually, class, these are many regulations, but we're just going to elaborate those with primary importance. So what are those major banking regulations? So first is Regulation B, or also known as Equal Credit Opportunity. This regulation prohibits lenders from discriminating against credit applicants, establishes guidelines for gathering and evaluating credit information, and requires written notification when credit is denied. So therefore, they cannot discriminate any potential lenders or potential borrowers rather on the basis of its race or his or her race, color, religion, origin, sex, marital status, or age, as long as when it comes to age, he or she is already able to enter into a contract. All right. So this regulation is used to justify what are the necessary requirements for a possible borrower to be granted with his or her loan. Regulation C is the Home Mortgage Disclosure Act, or HMDA. It requires financial institutions to maintain and annually disclose data about home purchases, pre-approvals, improvements, and refinancing applications involving 1 to 4 unit and multifamily dwelling. So it provides the general public with information on loan, which can be used to help determine whether the financial institutions are really serving the housing needs of the community. Regulation D is the reserve requirement on depository institutions. It sets uniform requirements for all depository institutions in order to maintain reserve balances either with the Federal Reserve Bank or as cash, as well as defines limitations on withdrawals from savings money market. Regulation E is electronic fund transfer. Establishes the rights, liabilities, and responsibilities of parties in using electronic fund transfers. and it protects consumers when they use such systems. Regulation G is the Safe Mortgage Licensing Act, or SAFE. SAFE stands for Secure and Fair Enforcement for Mortgage Licensing Act, or aka SAFE. It established requirements for the licensing of all mortgage loan originators. So we go to Regulation J, collection of checks and other items by Federal Reserve banks and fund transfers through FedWire. It governs the collections of check and other cash and non-cash items and the handling of return checks by Federal Reserve banks and provides rules for collecting and returning items and settling balances. So Regulation J provides rules for collecting, returning items, and settling the balances. Now, we're going to discuss Regulation M, consumer leasing. It implements the consumer leasing provisions of the Truth in Lending Act. This regulation requires meaningful disclosure of the terms when it comes to leasing. Regulation V, Fair Credit Reporting. It implements the consumer leasing provisions, So it regulates the collection, sharing, and use of customer credit information. It allows customers to claim a copy of their credit report from various credit agencies that hold information on them. So please do not mind the description. This one is for Regulation M. Regulation Z, Truth in Lending. Or TILA. The regulation gives consumers the right to cancel certain credit transactions that involve a lien on a consumer's principal dwelling, regulates certain credit card practices, and provides a means for fair and timely resolution of credit billing disputes. So TILA, Truth in Lending Act, prescribes uniform methods for computing the cost of credit, for disclosing credit terms, and for resolving issues on certain types of credit accounts. So for instance, the use of credit card. Regulation CC, availability of funds and collection of checks. It contains rules regarding the duty of banks to make funds deposited into accounts available for withdrawal, including availability schedules, plus rules regarding exceptions to the schedules, disclosure of funds availability policies, payment of interest, and liability. So Regulation CC governs the availability of funds deposited in checking accounts, the maximum length of time the money can be held, and the collection and return of checks. Regulation DT, the truth in savings, to enable consumers to make informed decisions about deposit accounts at depository institutions. Requires depository institutions to provide disclosures so that consumers can make meaningful comparisons among depository institutions. So uniformity in the disclosure of terms and conditions regarding interest and fees when giving out information on or opening of a new savings account. So there are other important banking acts and other requirements in the United States, namely Bank Secrecy Act, Anti-Money Laundering and Suspicious Activity Reporting, Call Reports, TRID, and RESPA regulations. Bank Secrecy Act, financial institutions are required to assist U.S. government agencies in detecting and preventing money laundering, fraud, or terrorism. So although there is a bank secrecy law, but in cases where they are needed to assist the government of the United States, specifically in those mentioned reasons, so they are mandated to do so. Anti-money laundering and suspicious activity reporting. So class, the purpose of that law is to help detect and report suspicious activity such as money laundering, securities fraud, market manipulation, or terrorist financing. Call reports. It contains information about the bank's financial health, and it must be filed by U.S. Bank on a quarterly basis. So what compose the call reports? It includes bank's income statement, balance sheet, loan, deposits, and investment information, changes in the bank's capital, asset sales information, and several other areas with the bank's viability. TRID is the TILA or RESPA Integrated Disclosure Rule. TILA regulations refer to the Truth in Lending Act, and RESPA regulations cover the Real Estate Settlement Procedures Act. TRID regulations cover the mortgage process and dictates what information lenders are required to provide to borrowers and when they are required to provide it. So now we're going to discuss on the application of banking regulation here in the Philippines. So on September 9, 1955, Republic Act number 1405, otherwise known as an act prohibiting disclosure of or inquiry into deposits with any banking institution, or simply bank secrecy law, was approved. This law was enacted to encourage individuals to deposit their money in banks instead of hoarding them. So this law was enacted to encourage people that instead of putting our monies in our drawers, cabinets, piggy banks, we instead deposit it to the banks, because depositing it on financial institutions like banks will help boost the economy, because it will be used for granting loans to other people or to other organizations or firms, which they will use to prosper their business. So why there is a practical need for bank secrecy law? Because the government wants you to be comfortable with your money being kept on the bank. Because if people might just easily know how much do you have on your bank account, the tendency is that, for instance, you have a lot of money in the banks, what will happen? And people could just know it easily by asking the bankers or those who are employed in the banks. And when they know that you have that huge amount of money, maybe your relatives, your friends will ask you to grant them credit, loan, or give them money. So the government wants us to be safe and comfortable with our banks and with our bank accounts. So probably this is one of the reasons why this law was enacted into. So why there is a need to protect the secrecy of bank deposits? Technically speaking, the law prefers that the money be deposited in banks so they may be properly utilized to assist in the economic development of the country, rather than hoarding it or keeping it on our safe places on our homes. Well, this is not as secure as keeping it on the banks, because banks are more secured, and we have that deposit insurance. So when it is in our houses or our homes, there is the risk of being stolen, being lost, being forgotten. Remember a story of an old person. I am not particular with the age of the people, of the person who has forgotten to exchange his money because the paper money he has was already obsolete, and the Bangko Sentral has already changed or updated our currency or the paper bill. So what has happened is that it can no longer be changed. So the paper bill has no longer used. It's already useless. cannot be used to buy anything. So it's much better to put our money in the bank. So the bank secrecy law protects all deposits of whatever nature in banks or banking institutions in the Philippines, as well as investments in government bond. This law prohibits any person, subject to some exceptions, from disclosing to any person any information relative to the funds or properties belonging to the depositors in the custody of the bank. So, in short, any person, most especially those working in the bank, cannot disclose any information relative to your account, to your funds, to your properties, to anybody. But of course, as they say, every law or rule has its exception. So what are the cases on which bank secrecy law cannot be applied, cannot be exempt? First, when there is a written permission or consent in writing by the depositor. So for instance, I can write a waiver granting the bank to disclose information to anybody. So when I give them consent in writing, so the bank can do it. Another is when there are cases of impeachment. And if you are well aware of impeachment, so these are proceedings against high government officials. So when there are impeachment cases, so the bank can disclose information. So bank secrecy law is not applicable. Upon order of the court, in cases of bribery or dereliction of duty of public officials. Of course, when there is a court order compelling the bank to do or give information, so it has to follow the order of the court. So, but here specifically, what cases are mentioned? Bribery or dereliction of duty of public officials. Another exemption, upon order of the court, in cases where the money deposited or invested is the subject matter of the litigation. So when the funds deposited in that particular bank is under scrutiny of the court because it's under litigation, the court can release order. So again, the bank has to follow the order of the court. Upon a subpoena issued by the ombudsman concerning an investigation it is conducting, provided that there must already be a case pending in the court, the account be clearly identified, the inspection be limited to the subject matter of the pending case, and the bank personnel and the depositor must be notified to be present during the inspection. So here on this exemption, it speaks about subpoena by the ombudsman. But there is a provision here that there must be a case already pending in the court. So these are the additional criteria that must be met. The BIR can inquire, or the Bureau of Internal Revenue can require into bank deposits in an application for compromise of tax liability or determination of a decedent's gross estate. So it's about the taxation. So when there is enough reason for the Internal Revenue to inquire, like the compromising of the tax liability or to determine a gross estate tax, so it is valid for this government agency to inquire regarding specific person's bank account. The AMLAC, or the Anti-Money Laundering Council, can examine bank accounts pursuant to a court order where there is probable cause that the deposits are related to an unlawful activity or money laundering offense. So it must be noted that there must be a court order and there is a probable cause of an unlawful activity or money laundering offense. The AMLAC can examine bank accounts without a court order. Where there is probable cause that the deposits are related to certain crimes such as kidnapping for ransom, violation of the Dangerous Drugs Act, hijacking, destructive arson, murder, and violations of Article 6235, acts inimical to civil aviation. So there can be the first one is there should be a court order here, can examine without a court order, but there is a probability that these deposits are related to specific crimes mentioned here: kidnap for ransom, Dangerous Drugs Act, hijacking, destructive arson, and violations of RA 6235. The Bangko Sentral can examine bank accounts in the course of its periodic or special examination regarding compliance with anti-money laundering law. So it's on the usual course of activity or action of the Bangko Sentral. So what is the penalty for violating the bank secrecy law? Any person violating this law may be imprisoned for not more than 5 years or meted a fine not exceeding 20,000 or both. So we're through with bank secrecy law. Now we're going to discuss anti-money laundering law. So this is RA, Republic Act 9160, an act defining the crime of money laundering, providing penalties thereof, and for other purposes. So we go straight to Section 4 of the law, where it defines money laundering as a crime whereby the proceeds of an unlawful activity are transacted, thereby making them appear to have originated from legitimate sources. So, a money gotten from illegal activity, unlawful activity, is being deposited to the bank to make it clean, to make it appear that it is a legal means, a legal income, a legal revenue of that particular person or account. So it is committed by any of the following. So first instance, according to the law, any person knowing that any monetary instrument or property represents, involves, or relates to the proceeds of any unlawful activities, transacts or attempts to transact said monetary instrument or property. So this is what we have defined a while ago. There is an attempt to transact the monetary instrument or property which was acquired through unlawful means. So second, any person knowing that any monetary instrument or property involves the proceeds of any unlawful activity, performs or fails to perform any act as a result of which he facilitates the offense of money laundering referred to in the previous paragraph. So there is a performance or failure to perform any act. Which, if being facilitated, will be an offense to money laundering. Third, any person knowing that any monetary instrument or property is required after this act to be disclosed and filed with the Anti-Money Laundering Council fails to do so. So there is a failure to disclose and file monetary instrument or property to the Anti-Money Laundering Council, which this particular person is required to do so. So there is a failure on his or her part. So we go to the section 7 of the law, which states that there must be 3 members of the Anti-Money Laundering Council. Namely, the Governor of Bangko Sentral ng Pilipinas, who will act as chairman, the Commissioner of Insurance Commission, and the Chairman of the Securities and Exchange Commission as the 2 members. So, what are the functions of the Anti-Money Laundering Council? According to the law, their functions are first, to require and receive covered transaction reports from covered institutions. To issue orders addressed to the appropriate supervising authority or the covered institution to determine the true identity of the owner of any monetary instrument or property subject of a covered transaction report or request for assistance from a foreign state or believed by the council on the basis of substantial evidence to be in whole or in part, wherever located, representing, involving, or related to, directly or indirectly, in any manner or by any means, the proceeds of an unlawful activity. Also, to institute civil forfeiture proceedings and all other remedial proceedings through the office of the Solicitor General. To cause the filing of complaints with the Department of Justice or the Ombudsman for the prosecution of money laundering offenses. To initiate investigations of covert transactions, money laundering activities, and other violations of this act. To freeze any monetary instrument or property alleged to be proceeds of any unlawful activity. To implement such measures as may be necessary and justified under this act to counteract money laundering. To receive and take action in respect of any request from foreign states for assistance in their own anti-money laundering operations provided in this act. To develop educational programs on the pernicious effects of money laundering, the methods and techniques used in money laundering, the viable means of preventing money laundering, and the effective ways of prosecuting and punishing offenders, and finally, to enlist the assistance of any branch, department, bureau, office, agency, or instrumentality of the government, including government-owned and controlled corporations, in undertaking any and all anti-money laundering operations, which may include the use of its personnel, facilities, and resources for the more resolute prevention, detection, and investigation of money laundering offenses and prosecution of offenders. The AMLAC has the authority to freeze according to the law. It's on the section 10. According to this section, upon determination that probable cause exists that any deposit or similar account is in any way related to an unlawful activity, what does the AMLAC can do or may do? It may issue a freeze order which shall be effective immediately on the account for a period not to exceed 15 days. And a notice to the depositor that this account has been frozen shall be issued simultaneously with the issuance of the freeze order. When we say freeze order, class, you cannot do anything on your account, deposit, withdraw, and any other transactions because it is frozen or it is being frozen. What can the depositor do? The depositor shall have 72 hours, so that's 3 days upon the receipt of the notice to explain why the freeze order should be lifted. The AMLAC has 72 hours to dispose of the depositor's explanation. It's another 3 days. But if the AMLAC fails to act within that 72 hours or 3 days upon receipt of the depositor's explanation, what will happen? The freeze order shall automatically be dissolved. And the 15-day freeze order of the AMLAC may be extended upon the order of the court, provided that the 15-day period shall be tolled pending the court's decision to extend the period. And no court shall issue a temporary restraining order or writ of injunction against any freeze order issued by the AMLAC except the Court of Appeals or the Supreme Court. So other than these courts, they cannot issue a TRO or writ of injunction. Lastly, the penal provisions. So for letter A, penalties for the crime of money laundering. The penalty of imprisonment ranging from 7 to 14 years and a fine of not less than 3 million pesos. But it should not be more than twice the value of the monetary instrument or property involved in the offense. Shall be imposed upon a person convicted under the Section 4A of this Act, which we have discussed earlier. The penalty of imprisonment for 4 to 7 years and a fine of not less than 1,500,000 Philippine pesos, but not more than 3 million pesos, shall be imposed if the person is convicted under Section 4B of this law. And the penalty of imprisonment from 6 months to 4 years or a fine of not less than 100,000 Philippine pesos, but not more than 500,000 Philippine pesos, or both, shall be imposed on a person convicted under Section C of this Act. All right. So thank you, class, for listening, and God bless. So any question?